Hello, everybody. Welcome to the Fintech Combine. I am your host, Kris Kovacs, and this is the series where we talk with and sometimes about community-based institutions, their digital and business transformation projects, and we meet the innovators, entrepreneurs, and fintechs that make it all possible. On this episode number 3 of our Powered by Curql series, we're meeting Wade Arnold, the founder and CEO of Moov, to talk about how he's bringing payment innovation to credit unions and to fintechs. Curql is the investment fund created by credit unions that has now made more than 40 investments in fintech startups, bringing the very best applications to the credit union marketplace. They provide both investment to the fintechs, but they also bridge the gap and help them start to acquire customers inside the credit union space. For more information about Curql, visit Curql, Curql.com. So if you're ready, let's suit up and get out on the field. Wade, thank you very much for joining us on the show today. I'm super excited to have you here. You have quite the track record. So let's start by telling our audience a little bit about yourself and about your company, Moov.
Absolutely. Well, number one, thanks for having me on. A little bit about myself. I think I'm a technologist at heart. This is my hobby, is to write code and build beautiful things. And accidentally, I became an entrepreneur, as really entrepreneurship was just a vehicle in order to create beautiful things and bring them to life in this world.
That's awesome. And tell us about Moov. Tell us about your latest endeavor.
Yeah, Moov is definitely a passion project in the sense that I've connected to, I think, 42 different core banking systems, every variation of quote unquote legacy payments provider. And what really happened in that experience is they were designed for a pre-internet world, whether that was walking into a box store or walking into a branch. The use cases of the software were really designed around that type of experience. And so for the last kind of 10 years, we've really put lipstick on a pig, meaning we've taken these new business models, whether that's even digital banking or omni-channel payments, fun little buzzwords, but really just how consumers want to interact with brands today. And we've tried to kind of match that against this old legacy integration pattern. And it creates really an impedance mismatch. These systems weren't designed to be 24/7, 365 and highly scalable for the Super Bowl. And so what Moov was set out to do was not just build a new payments service. And Moov is a network of network payments providers. So we're connected to every payment network in the United States, the Federal Reserve, the Clearinghouse, all 4 card brands. But we did that in a way so that you can build these beautiful new user experiences for new business models that didn't exist 10 years ago. And I think it's an important factor to think about. Something like an Uber didn't exist 15 years ago. Yet today, that's how we think about interacting from a payment standpoint with a random person that pulls up in their vehicle in order to take you somewhere. So that's just a great example of how payments and how banking is changing. We're meeting customers where they want to be served rather than telling them, hey, here's our hours of operation and you need to meet us when we want to serve you.
Is your typical customer a financial institution, or is it a fintech that uses your services to enable payment?
Yeah, I think the word fintech and financial institution are like a Venn diagram. There's definitely financial institutions. Some of the largest credit unions, as an example, have more software engineers on staff than many fintechs out there. So they're more progressive. They're more in tune with what the needs are of their members compared to frankly, most fintechs. But the common denominator for Moov is that you have the ability to write software. And so I think that's a big differentiator, whereas Moov is an infrastructure component. Think of cloud computing or Twilio for SMS messaging. We're that lower level infrastructure provider. And the reason for that is it allows our customers kind of to build out the experiences, the flow of funds that they want for their member, rather than us dictating that through a Windows um, user interface that says, hey, you have to do it this way. We're forcing these guardrails. We would rather co-create something beautiful with our customers. Specifically in the credit union space, we work with a lot of lending platforms, core banking platforms, account opening platforms, digital banking platforms. And so if you think of those companies as software companies that want to provide these delightful user experiences, they then work with Moov in order to bring that product or complete solution to market.
Was that challenge of doing payments something you learned as part of your experience at Banno? And is that part of what inspired Moov?
Yeah, what inspired Moov, really three things. I built Banno. Banno is a digital banking platform that was sold to Jack Henry over a decade ago. And this sounds crazy, but when you click the button pay, you're building a digital banking experience, they kind of think you're in charge of that pay button. And you're like, no. I just sent a message to your core banking provider who forwarded that message on to your payment hub provider. And you kind of get this weird little Russian doll problem where everyone points fingers at one another. And the only person really screwed in that scenario is the end user, because they wanted to pay their bill. And so when we built Moov, it was really about those type of experiences that I had experienced, whether that was at Banno, at Bilgo. I think I wasted a couple $1 million investing into beautiful fintech ideas that then turned around and gave their money to the legacy incumbents and never launched the beautiful idea that they had. So watching that over and over, where people were spending more time integrating to legacy infrastructure than they were actually developing the thoughtful idea that they wanted to bring to the world. That really was the impetus for Moov. So create a single integration, every US payment rail, single contract, single wallet. And this allows people to actually focus on what they want to do, which is the innovation for the member.
So you started working on the front end, right, and say a digital banking solution, and decided in the end to develop an infrastructure component that could be used by a variety of them. There's a lesson there, I think.
There is. I think the best ideas are companies that they spent more of their time solving an infrastructure problem than solving what they were out to do. So whether that's, you look at great companies like Plaid, they really started as a PFM company and then said, hey, getting access to good data is actually a harder problem than what Zach and William started off to do. And I think for me, whether that's digital banking or bill pay, it's really important that the payment goes through. And the amount of apologies in any credit union's call center for payments not going through, or payments not being done on time, or not knowing if the payment went through or not. So maybe try it again, maybe not. It really is a mess. And it comes down to these legacy systems were designed to not be always on. You compare that to every other thing that we do is designed to be always on. And so, we wanted to build an always on payments infrastructure. There's no closed branch hours on Sunday morning or down for maintenance on Tuesday night. It's 24/7, 365, and we have to perform at that level.
But you took the approach of not building a specific user payment experience, right, for institutions, and instead said we're gonna build a solution that can be used by developers to create new solutions, right? Like was that a strategy that you kind of developed over time, or was it one that you initiated the company with?
It's one we initiated the company with. The strategy was really, we can't build everything for everyone, right? But you need this substrate that allows you to go go live quickly. And we're really focused on getting you live quickly. So our average customer goes from contract signing to in production in 11 business days. We think that's too long. So literally my project this week is working with my team on creating Claude code skills, creating MCP servers around documentation, because we think customers should go live in a day. Now there's going to be some things around pricing or contracting or risk or compliance, but let's go create that pressure that the technology integration is done in a day. And now we can put our focus on how do we make compliance and underwriting get done in a day. So I think it's really important for institutions to be able to move fast. No pun intended. The point is, I've got an idea, I want to iterate on it, and I want to get it into market as quickly as possible. And then, my personal opinion is that we shouldn't tell people how to pay or get paid. We should just give them all the payment rails. There's no amount of coffee that you and I can have sitting here pontificating on the needs of every single customer out there. Maybe they do want their merchant transactions on a Saturday or Sunday. We shouldn't sit here and say, no, we only do that over ACH.
That's not how that's done.
Right. We shouldn't assume that people don't want their payroll done, funded and then dispersed in the exact same day. You can absolutely do that over RTP and FedNow today without wiring money in 3 days in advance and then ACHing money out. And so I think giving these tools, loan disbursement, if it's $200, why wouldn't you use push to debit for that product? It's a great product for these different use cases. And so where Moov comes into our partners is I think we know more about payments than they're ever going to know. And we can show up and say, here's how you make this elevated exchange of value between two humans. Here's how I would go about it, and embed that into your product and make your product better.
So if an institution has developers, and we're talking about just financial institutions now, if a financial institution has developers and they say, hey, we've got this payment challenge, this payment opportunity, this payment experience that we're trying to create, that's when they can engage with you and you can really help them say, well, here's the portfolio of rails we can use and make available to you. Let's walk you through how to do that.
That's correct. Or we get introduced into vendors all the time. So it could be an account opening product. We have, I think, 5 different account opening platforms where the institution said, I get all these accounts opened and then they never get funded. And so I have this compliance cost. I have this, mule account just sitting there that can contract. But do I shut it? Do I wait until an ACH comes in? With Visa Direct and MasterCard Send, that can be instantly funded and you can start spending out of it right away. And so, yes, there are institutions that come to us and they've got a great idea. They want to build something on top of our platform. But more times than not, they're saying, I'm seeing this at Chime. I'm seeing this at Bank of America. Why can my vendor not do this? And they'll say, well, I think that needs to be in your core banking system. Well, I can assure you, like merchant processing or debt repayment or debt collection is not coming to your core banking system anytime soon. And so we show up and kind of bridge that gap of all the modern payment rails, great incentive programs. We've got a company as an example that does mortgages. So a couple million mortgages at the beginning of the month. But a lot of those customers end up using debit card for that because we can enroll them into the Visa and the MasterCard debt repayment program. It's a convenient way for them to pay, costs them a couple bucks, and they're on their way. So it typically is really more of a joint solution where they bring in some of their vendors, they bring in Moov, we work together to build a solution. And the vendor wins in that case too, because they can then take it to every other financial institution.
Well, they can take you to every other financial institution.
Yeah. We like that.
That's the model, right?
That's the model. A
What do
great
you?
one's Jack Henry. Like
Yep.
we've partnered with Jack Henry for Tap to Local, which is an incredible product. It's full merchant account with
Mm,
tap to pay on iPhone and Android. Um, if you go and talk to a financial institution and say, "Hey, do you want to do merchant acquiring processing?" They typically say no. Would you like all of your small businesses at your institution to accept deposits? They say yes. You just want to do that deposit
yeah.
over a debit card rather than a quill and a check in order to take a photo of it. Maybe safer, maybe less risky, but it's reframing that solution.
Mm,
And specifically in that example, we tried to figure out why.
mm,
Why aren't financial institutions doing this? And it's just historical. It's historical. You needed to give them a handheld terminal. Terminal costs $500. Now there's a
right.
minimum. Now there's risk. I'm floating the cost of the terminal. The money actually settles at a different financial institution than mine. So, not interested. But
Yeah.
now, when everyone is walking around with a terminal in their hand, a digital banking app that can access that terminal, and
Hmm.
they can put those deposits into their institution at effectively zero marginal cost per merchant. Now it's a great solution. And that's where I feel like technology sometimes has surpassed what we're willing to do as an industry to provide services for our customer. Um, it's just reframing the problem and applying kind of these net new solutions to it.
Yeah, there seems to be, especially as technology is evolving so quickly, there's more and more perceived limitations that are really just limitations on how we've done it in the past.
And again, you had initially asked why was Moov built? Well, if I have a new business model here. So you take merchant acquiring processing one more time. 7.2 million small businesses in the United States before COVID. We have 34 million businesses now.
Hmm.
Tell me what has changed at most credit unions in serving businesses.
Not
So you
much.
have a 4.5, 5x increase
Hmm.
in number of small businesses. Most of these small businesses are 1 to 3 people. Okay. Well, but my business checking account, is $35 a month, and it has overnight sweeps and wires and all these different things. That's lunacy.
Yeah.
Like, you're a pretty big business if you need, that sophisticated treasury management program. Most of these businesses are on net, the founding story is something around I was laid off during COVID.
Hmm.
Um, I was some change in their family, and the business owner is doing this so that they never are in a position of not having financial strength again in their life. That's really the motivation, whether they're building websites on the side or
Right.
doing landscaping or the teacher that does tutoring now. It's all about supplemental income to not be in that position that happened during COVID.
Hmm.
The mindset of Americans have changed because of COVID. Has the mindset of credit unions changed to serve them? No. So why are we not actually helping these members that go into somebody like, let's pick a big credit union, Navy Federal,
Hmm.
right? They've got what, 12, 13 million members there.
Hmm.
I bet there is a million small businesses in their retail accounts
Oh, at a minimum.
at a
At a
minimum.
minimum.
Okay, what are they doing differently to serve that customer?
Yep.
And then they're going to sit around, and let's stop picking on Navy Federal, but the industry in general. Well,
Hmm.
why is Square getting these deposits? Why is Afterpay
Right.
getting these loans? Why is Amex getting this credit card, or Ramp getting these
Hmm.
expense management, these profitable things? And if the answer is I'm just going to sit there and wait until my core banking provider shows up with a solution, that's not really a strategy. That's a purchasing behavior. And
Yeah.
so where we're having a lot of fun is these institutions that actually want to compete and help their members,
Hmm.
and create these delightful payment experiences. But it has to be more important than payments. It has to be actually servicing the members, and then you can build, really beautiful products.
Can you give an example of an institution that has used your product and what kind of results? You don't have to give the name, but what kind of results could a credit union expect?
Yeah, I love this. I've got a simple one, and simpler is sometimes better.
Always.
So Georgia United is a great customer of ours. We're doing a product with them called Rapid Transfers. So it's with Georgia United, with Jack Henry, with the Banno digital banking platform. And all they did was, and I'm sure they've been pitched on Visa Direct and MasterCard Send 1,000 times, right?
Mm-hmm.
The beautiful thing of what we've built together with them is it's real-time external account transfers.
Wow.
And you can do that in a very safe and secure way, because when like my primary bank is USAA. Mm-hmm. So my USAA debit card, if I also had an account at Georgia United, has Wade Arnold on the debit card. I have a CVV. I have an address. Like, no micro deposits needed. I can query
all of which can be verified.
All of which can be verified.
That's right.
So if I have my account at Georgia United and I link my USAA account, I now have a holder name match, and I've validated CVV and zip code. So if you have a PAN CVV zip code and the name matches, you have a pretty darn safe tool here.
Yeah.
And then on Visa and MasterCard, these are the only real-time rails that have ubiquitous push and pull. Pull is really important if you want deposits starting to catch on. So that allows us to safely, instantly move money in and out of the institution. And we know all the stats, right? There's 7 financial relationships, all these type of things. But that was kind of simple from a mindset where you said, Georgia United to USAA. Okay. Well, who else has a Visa or a MasterCard? Coinbase, Venmo, Cash App. So if you have money in
everybody now.
Yeah, Robinhood. So brokerages, neobanks, crypto exchanges, P2P networks all have a Visa or MasterCard credential on it that support the same flow of funds. And so if you want to, custodial, really the primary deposits for an institution, one of the things that you need is the safety and security that it's not going to take me 3 days to get money in and out of Venmo or Coinbase, but that I can instantly do that. So this product, although the user experience is super simple, type in your external card number, we do a $0 auth, approve it, now you can instantly move money, has really been great for them to create this experience where they can be the hub. They're going to have these other external relationships, but they have the safety and convenience knowing that they can instantly move money in and out of those other institutions, and it makes them the focal point. And so there's more fun things we do, but I love that one because it's like, how long have we been waiting for account to account transfers to be safe and secure? Also, it's cheaper than their P2P network that they use to do the exact same thing. And it allows them to pull money in.
So that generates a new member experience, right?
That's absolutely
a new flow. One of the things that I think credit unions and community institutions in general, they're afraid to death of changing experiences that the member might reject it, right? How do we help credit unions get past that fear of introducing a new but better member experience?
Yeah. So if I'll go down a rabbit trail with you, I think the idea that one size fits all is such a bad idea. If I were to rebuild a digital banking company today, I would use generative AI to create a different user experience for every single one of my members.
Yeah.
And that you can do that today. And if you go look at Cash App, if you predominantly use Bitcoin on Cash App, your Cash App experience is way different than the person that uses Cash App as their primary bank account. It's way different than if you only use Cash App for P2P. Why? Because it's a complex app. And so rather than, having like pin your tiles or whatever thing from, 2007 we want to try, they're using analytics and usage patterns of the features to drive prominence of those features into the user experience. And so, I would be yelling at my digital banking provider or my internal team, like, why are we not in a world that we can customize anything? Why are we not customizing the member experience? And
Right.
so I say that's my 50,000 foot view. My second view is you need to be able to roll out features to a creative group, your early adopters. And so give them something. That could be, extra free checking. That could be maybe you get an extra 10 bips off of a loan if you're part of this focus group. If you sponsor something, maybe they get free tickets once a year to come together as a user group. But you really do need to have 200 to 500 members at your institution that you can roll these ideas out to and ask humble questions. Did that make sense? What did you think that did? When you read that sentence, what was your expectation? And it's a way of getting harsh but critical feedback right away. And then you can start doing, A/B testing as you actually roll it out to the rest of your institution.
Yeah, that would be powerful to have that kind of group that you could actually roll things out to and get feedback.
Sadly, we're doing like targeted advertising is like, woo, cool. 2026. Like Facebook's been doing that since 2008, individualized targeted advertising. So we're more than 2 decades behind on some of this stuff. And I think that's the fear of a neobank shouldn't be, they have a lower unit economics because they don't have branches. Well, it turns out people actually do like branches. So the thing I would be copying from the neobank is the ability for them to build technology that allows its members to be self-service. The more self-service, the humanity thinks it's like a good feature that I don't have to call somebody. I don't know about you, but if I could delete the phone app off my phone, I would. The interaction with one human to another is difficult, but we want to explore these digital experiences in order to figure out how to self-serve. And that's really the point is, can I do this 24/7, 365 on my own and not meet the edge of self-service where then I have to walk into a branch or give somebody a phone call.
So you have such great depth of experience.
Part of the scars, however you want to,
whichever way you want to put it, right?
I'm a book of what not to do in financial services for 20 years.
Part of your story is also, though, that you have partnered with Curql, right?
Yes.
What did Curql bring that you didn't already have? Like, what was the extra value they brought to your experience and to Moov?
I think their network was really impressive to me. So, our largest sponsoring institution is Viridian Credit Union, which is a pretty large credit union. I happened to rent a fourth of their building at Banno when I was running Banno. And so I got to know Nick Evans because Nick Evans was at Viridian Credit Union. And there's just certain people in your life that are always advocates. And Nick has been an advocate for Wade Arnold, regardless of what I was doing from the day I met him. And a type of gentleman that shows up and says, how can I help? Not what can you do for me? And that I'll learn a lot from Nick. Capital comes in many ways. Obviously, dollars and cents are maybe one of the better versions, but the network that Nick has and the Curql team has put together around progressive credit unions. And I mean that like they're doing something. Number one, by investing into Curql, they're saying status quo can't stay the same. They wouldn't invest into Curql as an LP if they thought it could stay the same. And then second, we're willing to try some of these things that Curql goes out and invests with. And you know, whether that's asking a member to go use real-time account to accounts or asking the first credit union to try something new, these are the cold start problems of bringing a product or a feature to market. And so what I saw in Curql was, yes, access to capital, which, helps a lot, but more importantly, access to this network of progressive credit unions was really the compelling reason to partner with them.
Did you already have your first customers before you connected with Curql, or did you become a part of working with them earlier in your development?
We had partnered with Jack Henry, which has a pretty decent footprint in the credit union space. But I think as we started working with kind of the top 10, 15 credit unions in America that did have engineers in-house, that did want to do something unique. Then, outside of like running into them at Money 2020, it was how do I not just go do this with one, but how do I create this consortium of credit unions that want to do something unique? Because one credit union, even the biggest one probably can't, probably isn't the best way to leverage doing a one-off.
Certainly not the best place to start.
Not the best place to start. So being able to kind of get this mind share of creative or progressive credit unions and saying, hey, here's something we could do together and have a captive audience, because they're literally investors in Moov now, to me was like a great way of getting, in the same way that I said, hey, every credit union should have 500 members that they can test the new build with. I need 50 financial institutions that I can test the next thing with.
Right. Talking about the next thing. So again, as I said before earlier in the interview, right, that you have had an amazing history and experience, right? Your track record is pretty renowned. What did you learn in those earlier companies that you brought to Moov that caused you to do something differently?
Yeah, I think the biggest thing is, and I actually learned this a lot from Greg Adelson, who's now, he was running iPay when I first met him, and now the CEO of Jack Henry. But he genuinely cares about his people more than his customers and his products. And there's a lot of lip service to that, but I am really trying to make Moov the best place anyone has ever worked at that works for me. And that kind of creates all kinds of focusing on your employees creates all kinds of benefits that you don't see until you're kind of this next, second time, third time founder. And one of them is like, I want my employees to make a lot of money on this. Whereas the first time founder, you're like, I want to make a lot of money if this thing works. And I want them to have a good time working here. So what things can I do to get rid of the bad things about work, right? We are paying you, so there's always bad things. We're not expecting you to show up for free. But how do I alleviate those bad things if I want to make a good place to work? And then an external effect of that is you alleviate those bad things, and now they have more time for creative work. And now your product's better. And you can hire better people. Now your product's better. And you there's all these things that actually make great commercial sense by just creating a great place to work. I think when this is all said and done, I'm more excited about the people I got to build this with than whether or not we did real-time external transfers. So
Right.
those are just like stops along the way. So I think that's important. And then maybe a second one, just following on with Curql, is partners matter, investors matter. Matt Harris at Bain Capital, Angela Strange at Andreessen Horowitz, Dan Rosen at Commerce Ventures, Visa, Curql. These are connectors beyond capital. And so I've been very conscious about the type of people that I'm surrounding myself with, because they help create opportunities or serendipitous moments where you get to meet somebody, and those allow you to go faster as an organization.
Are there lessons in what are signs of maybe somebody you shouldn't partner with?
So for us, we're focused on customers that care about their end user. I know this sounds like a crazy litmus test, but Moov as a company, like as soon as we hear things that aren't helpful to like the member, what's your least cost routing strategy? Right.
Right.
Like none of my customers want RTP.
Right.
Like, wow, you speak on behalf of all your members. Good for you.
Interesting.
Yeah. I think payments has a bad rap in the sense that it is sometimes thought of as like the place I can save money, the place that is the end of the experience. Like, no, it is the most important part of the exchange of value is the most important part of the experience. Whether you're a retailer and you finally get the sale, you want that to be exceptional. If you're inside of your digital banking app and you want to do this external transfer, like, well, we do that over ACH. It takes 3 days unless it's a weekend and there's a holiday on the Monday and blah, 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 right? Like basically, I don't care about my member, but it's cheap and we charge $3 for it.
Right.
You are not my ideal customer. Like you should go away and other institutions are going to take you down. So we really do, I think, focus on those that want to kind of have this elevated exchange of value, because then they care about their customer like we care about their customer. So we want that to be amazing. We want that to be beautiful. We want that to be delightful. And if your view of payments is, hey, can I convert some of these real-time ones over to ACH so I can save 8 cents? Probably not the ideal candidate for Moov.
But Wade, we've done this before. I know we need to be able to check this box and collect this, authorization. And like, how do you work your way through that where they know better, Wade, because that's how they've done it?
I think from a product offering, it was, I'd rather be lucky than smart. Early on, I hired head of risk from Huntington National Bank and head of compliance was at the OCC for 21 years. And there's a lot of fin in fintech. Okay. So I like having people on staff that know better and can, when somebody says we have to fill out this form, there's nothing better than like Kim saying like, well, I actually wrote the FFIEC IT Examiner's Handbook, and the intent of that article was this. And that's part of every single product is whether that's legal, risk, compliance, they have to be at the table along with the technology players. And that's how change actually happens. Because it's usually one of those 4 divisions doesn't agree with the other division, and that's what makes progress halt. And so if you can show up with all 4 divisions, legal, compliance, risk, and technology, now you can answer everyone's questions and move forward.
How do you think, it's 2026, so I have to ask you the AI question, right?
Yeah.
How do you think artificial intelligence is going to impact kind of the world of payments as they exist today?
So I think payments just get cheaper. I'm
Hmm.
excited about that. So you have an imputed risk in interchange. And what is interchange? Interchange should be in a liquid market rated at risk.
Hmm.
So I'm going to take on this interchange risk as an issuer, and hopefully my interchange is not less than my losses. And so I think you're going to see people get more competitive in things like risk and interchange because they
Hmm.
can have individualized models around that risk. And so I'd be I'm watching Capital One and Discover, right? Like this is to me the new Amex.
Yeah,
It's the first three-party network we've seen since American Express. So
that's
that's
right.
pretty crazy to watch. But but watch them like right now we do kind of pricing based on MCC code or card type.
Right.
If MCC code and card type equals then interchange, like what? In 2026, like, no, that's Wade Arnold at the brewery he always goes to in Golden, Colorado. There's no risk, period,
Right.
of this
Right.
transaction. So I think we're actually going to see
Oh, wow.
incentives and loyalty change to an individual basis because we can add more than a mid, an MCC code, and an amount. Well,
Yeah.
that's not a lot of data, but as we add more data, I think you're going to get more price elasticity when it comes to risk based pricing. Hey, if my card shows up in you know I don't know someplace across the world and I'm buying something I never bought before, maybe it should go through at 18%.
Hmm.
And give me that feedback and a push notification that this doesn't seem like a good idea, but we're willing to underwrite this in real time and let you do it. So I think both ways you're going to get more flexibility when it comes to payments rather than like mindset wise. Think of Yahoo was all categorical.
Right.
All payments risk is still like Yahoo. It's categorical versus usage based, which is really what we see, in Google and now these new
Right.
AI tools.
Very cool. If somebody is interested in learning more about Moov, be they a fintech or financial institution, how do they reach out to you? How do they learn more?
I think if you want to learn more about Moov, I think you should learn more about me. So follow me on LinkedIn. Um, I do a lot of provocative posting there. Move.io is where obviously our corporate website, but we also have a Slack channel that has over 6,000 kind of fintech bankers, credit unions. There's probably nobody building in the United States that isn't in that Slack channel. And so you can also join that. And a lot of people talk about our open source projects. I jokingly say we're the largest fintech on GitHub, except we're the only one. So take that for whatever it's worth. But all of our low level payment protocols we actually open source because we think rising tides lift all boats. And so even though companies like Bank of America and PayPal and Square and Stripe use our open source libraries, in some ways they're competitive, but in other ways we're all just trying to make kind of financial institutions better moving forward.
Was going open source part of your original plan, or is it something you developed over time?
So Moov technically started as I was so sick of connecting to ACH systems that were half-ass implementations. So
Mm-hmm.
you'd go buy an ACH library that worked on .NET that only ran on Windows NT, but it also only supported web and PPD. Well, there's 18 other SEC codes when it comes
Right.
to ACH, and so I at that time had probably personally written 3 or 4 different ACH parsers and writers,
Mm.
and just like everyone else in the industry, I build it for whatever the use case was. So maybe it was web debit, or maybe it was payroll, so PPD. And for me, it was like, hey, can we get a complete implementation of these protocols, whether that's ISO 8583 or ACH, or we have an open source sanctions search that is probably better than most commercial products that you can buy for kind of your AML and BSA workflows. So we do all of that mostly because I grew up in an era where fintech hard, just pay me, and send stuff into the black box, and I'll give you an answer. And so part of this was just, hey, let's be open and transparent, and where our product wins, we'd love to earn your business. And you want to just kind of build this yourself, we give you the primitives to do that. Most people that build it themselves call me back and say, hey, I'm not so sure I really want to make sure this ACH file goes out at 4 p.m. on Friday. But so there is some flow back into the system, but it really is about education.
That's very cool and very unique. Having built closed systems, right, myself, how do you go about setting up the company differently from an open source perspective? If open source is going to be part of how you acquire and deliver innovation.
We leverage open source, I don't think, as a Red Hat freemium premium model. We leverage open source as good stewards. No different than FinTech DevCon. Our conference, no sales pitches, just roadblock talks. Lead with education, lead with transparency. So if you think of our, what's in it for Moov, we want to be the financial services brand associated with education and transparency and openness. Like, that's a pretty good brand. And whether that's, that you can generate an ACH file doesn't mean you want to operate an ACH system.
Right.
Those R codes are a lot of fun to run down. So, so we really want to just leverage all of these things as education, because I think a more educated buyer is probably going to choose Moov.
By the sounds of it, I think you're right. Awesome, Wade. Well, listen, I really appreciate you joining us today. We will go ahead and include the link to Moov and as a part of the show notes. But thank you very much for joining us today.
It was a lot of fun. Thanks for having me on.
You as well. Wade, thank you very much for joining us today. It was a fantastic conversation. If you like this content, please like and subscribe on your platform of choice. Don't forget to check out our LinkedIn channel for additional behind-the-scenes content. And thank you very much for being here. We will see you next time.